BB Biotech weathered the challenges of 2016, an admittedly difficult year for biotech investors. With a small positive total return of 0.3% in Swiss francs and 1.9% in euro, it beat the sector benchmark Nasdaq Biotech Index substantially. Biotech stocks initially advanced in the fourth quarter thanks to tailwind from the US presidential election outcome, before the spotlight shifted back to the topics of healthcare cost and drug price inflation. Nevertheless, BB Biotech continued to build on its solid market position and is proposing a dividend of 2.75 Swiss francs per share for 2016. BB Biotech's share price in Swiss franc rebounded more than 10% in the fourth quarter, driven by a combination of the strengthened US dollar and the closure of the discount to net asset value. In the fourth quarter, we reduced our shareholdings of Actelion after the shares surged on the news of its possible takeover by Johnson & Johnson. We increased positions in the two large caps Alexion and Novo Nordisk, and in several small cap stocks such as Intracellular, Macrogenics, Juno and Argos. The position in Sempra was sold following the disappointing ruling by an FDA panel, and the new position in Myovant was opened. Myovant is developing a drug to treat endometriosis, uterine fibroids and advanced prostate cancer. We are expecting an acceleration of major product approvals and milestone readouts for the industry and our portfolio in 2017. Examples here are the launch of Spinraza for spinal muscular atrophy and niraparib for ovarian cancer, as well as the targeted cell-based cancer therapies. Biotech stocks are trading on very attractive valuation, so expect more acquisition by the larger players, including pharmaceutical firms. Action by the new administration in Washington could accelerate this trend, and we expect investors to follow suit. Repeal or revision of Obamacare will be front and center throughout the year, and there may also be some volatility in the sector to any government-imposed drug pricing controls or adjustments in the US. Despite these transitional events, which will attentively follow, as always, we remain strongly convinced that the future of the biotech industry is bright. The sector will further demonstrate its strength as a source of innovation, and notwithstanding short-term uncertainties from political change, we believe these innovations will be converted into substantial value for patients, care providers, the healthcare system at large, and of course for investors, which includes BB Biotech shareholders. The dividend policy introduced in 2013 will be continued. The board of directors is proposing a dividend of 2.75 Swiss francs per share at the AGM on March 16, 2017. This is consistent with a 5% dividend applied to BB Biotech's average volume-weighted share price in December 2016. We are looking forward to an exciting 2017 and remain dedicated to finding, analyzing and investing in leading-edge biotech firms with exciting news flow and robust growth prospects.